Hello, this is Todd Foster, and this is your market wrap for the week ended November 2nd, 2018. Well, market continues to trade very volatile as we come out of what looks to be a bottom on that Monday. And we've had a really nice bounce up that's recovered about 50% of the decline. I'll show that to you in a second. But the big news event today was Apple. Apple had earnings. They did okay. I don't know exactly why it's going down, but I don't really care. That's a good thing about technical analysis. All I know is that the market doesn't like whatever they said, basically. But we see big volume here, not oversold, and we're breaking below the low on Monday. So to me, this looks like Apple needs to go lower, and this will feed into my other conversation about the broad market where there's possibility we're going to a new low before this is over. So that was the big story here is Apple, and this looks like there is some support here, so maybe it can hold here. But if the market gives up where I show you in a little bit, it looks like at least a test of this 190, but probably more likely is a test. And yeah, and look at all that support. So this is where I think we had a good bounce, but I'm not positive. I'm not too sure that we're out of the woods just yet. I think I wrote that as the first part of the written, but you see this zone in here? That looks like where maybe Apple has to come into. Anyway, that's Apple. That's the one story. The other story was the jobs report, which came in good and hot a little bit. Wages increased, and we're seeing a big move up in yields. See that? Up 2%. Now, usually the stock market follows yields, okay? So given, I want to temper my bearishness from last week. Last week, I never went full bear. I was 60-40 bearish. I'm moving back to 50-50 because of a bunch of things, and I did mention them in the report. No yield curve inversion. I can show you that. See, we need to get below that line. See, it's curling back up specifically because this is happening, okay? So the yield curve is steepening, which is usually bullish for the economy, okay? That's the first thing. The second thing is there is this thing called, from the confidence board, leading indicators. They usually turn, I've looked, almost every recession, they turn down even before the stock market or right as the stock market's topping out. We were positive last month on leading indicators. Sentiment, when we were back at the old highs on the S&P, up here, there was not uber bullishness. Well, maybe from you guys because you guys watch me and we were, a little cautious, but we didn't get any big bullishness here. And of the new accounts that we were bringing in during this period, everyone had cash still. And that's not how bull markets usually end. Okay, so, and then the stats on the midterm correction. Look at the midterm year started here. We said we were going to have a correction. Remember, all last year we spoke about this year having a midterm correction. Well, we had this A, this B, and looks like this C. Or do we have to go lower or at least test this low? And I think that's what is still out there. So I'm still thinking there's a possibility here we go to new highs in 2019. Oh, this last fact. So midterm correction is playing out as it should. Midterm corrections usually are about 10 to 20%. I think we did it here was around 11 or 12%. So we satisfied that requirement, which is good. But one of the most important, another piece that I found today, which I thought was a big deal, was that since 1950, there has never been a negative down year in the third year of a president's first term. That's a good stat. That in combination with the midterm correction, which you see it right there on the screen, it's playing out. That's why I'm thinking we still have a shot at new highs. Now, that all being said, I don't know if this correction is over yet, okay? And that's what we're going to start to drill into a little bit. And when we go back to that yield chart, you notice I have a green B here. This could have been A, B, C, A. This is B, and we're still going to come down here in C. And if that was to occur, remember the stock market follows yields. It would mean the market is probably heading to a new low. And that makes complete sense that money would flow back to bonds. Remember, yields and bonds move opposite. So if this moves down, bonds are moving up. So let's see. So what I guess I'm saying here is I'm still thinking the possibility we go to new highs, 3,200 on the S&P, but we may have some more corrective action before it's over. That's what it basically boils down to. So I showed you that. I wanted to go back to a lot of options. I understand, and this is a little confusing, but either one is, this was A, green, B, 4 is in, and we're going to go 1, 2, and start. I should change these labels a little bit, but this would be 1, this would be wave 2, and we're going to head up strongly in wave 3. Okay, and that would give me very confident. If we go up here, come in a little more next week after the election, we start rallying very strongly, and we get one of those breath buy signals. Remember, we got that breath sell signal right up here, and it knew before the market tanked. Well, if we get that breath buy signal, and we have this 1, 2, and we're starting to rock it up, we're on our way, and we're probably on our way to 3,000 on the S&P. And I'm going to drill into this. See that little gap in there? I'm going to drill into the shorter term chart to show you, but here you can see it on a daily chart. If we get below this right in here, or actually no, it's right down here. We get below this 2640 area right here. Say it looks like today is some sort of topping action, or we're topping right at the 200 day. You see that? See how I hit the 200 day this morning on the jobs and then it rolled over? And it's typical bearish behavior. If it was to break below this 2640-ish level, then I think we're going to see a low below Monday and probably down to here at least. There's an outside chance it comes down a little bit lower, but I would at least like to see a test of this. Okay, so let me drill into this is a 10-minute chart. So we're going to drill into that action off the bottom. You see that? That's the daily chart. This is the action in a short-term chart off the bottom. Okay? So this could have been 1, 2, 3, 4, 5 waves up, which is required for an impulse for us to get out of here. And now it looks like we did A, B, and we're going to come into here into Monday, into Monday's close, right into election day. And then hopefully, see that gap right there? We fill the gap. We hold this even 2660, turn back up strongly, boom, and we get that buy signal. We'll be getting back fully invested. I know everyone got very bearish very quick. We were bearish early, but it played out, and now we're starting to kind of temper our bearishness, which is good. But if we drop below here, there is the 2640, this little low right here, then we're in trouble, and then we're going to probably go down to that 2520. Regardless, either A, the bottom is in, so past that, or B, we're going to have one more scary drop, but after that drop, that should be it, and we get the real rally out of there. So a lot will depend on how we go into, how we handle this kind of area, and we'll see. We'll have to just take it day by day. The politics, we don't use politics here to invest your money. Of course, the reaction to whatever's going on politically, if it shows up in stock prices, we are reacting to that. But we're not making any judgments. I have no idea what the market wants. And to be honest, I don't really care. I just want to see what the market's going to do after the election is behind us. Okay, so I think that's a big event. And we have Trump keep kind of prodding the market. I don't know if he's trying to jawbone, but he keeps saying, hey, I had a meeting with the president in China. And just now he said, oh, I'm going to meet him in the G20 at the end of the month, things like that. So I don't know if he's trying to prop the market up after it's selling off the last few weeks before the election, or if that's going to come to fruition. But maybe they're getting somewhere a little bit with the trade deal in China, which would be huge. And then that last piece is the Fed. I think after the jobs number today, they're not going to tell us after December they're going to lighten up, but that would be awesome if they did. But given the jobs number, I think wages were up 3.1%. I think that the Fed is probably going to keep their foot on the accelerator here. So that's a missing piece that we have. What else could I show you? Gold. How could I show that to you? Show you on this one. So this is the gold stocks. it looks a little corrective here, but it did hold exactly where it needed to. There's a gap in there. I don't know if you can see it. It filled a gap here 2 days ago, held the 50-day, and then it rallied yesterday, and today it's holding together, even with those high in yields, right? So if yields are going up and the Fed's squashing it, they should squash gold. But as we see, GDX is holding up. Those are the gold stocks, and then gold here was flattish. Yeah, it's down 0.06, so basically flat on the day. Needs to hold. GLD is what we own for you guys. It needs to hold above this 114. There is that same gap. I don't know if we're going to need to fill that or not, but so below this 114, I think, which lines up exactly with around 1200 on the gold price, which we keep talking about, that 1200 number. It was to break below this, then gold's going to go for a new low. And we could probably get a clue from the GDX. Oh, what happened? Here's GDX, yeah. If GDX gets below this low, then it's leading gold, and it will tell us that gold's going to come down. But for right now, it's acting well. And, you know, it's above 1200. And even in the face of this dollar that just keeps going up, up, up because the economics are so good here in the country, gold's still holding up. So I like that. That's good stuff. I think that's all I really have this week. Yeah, I think that's really all I want to talk about. Gold, we talked about interest rates and the market. So, oh yeah, going back to, just remember, I just want to get one more caution out there for any home gamers that are trading. I'm going to show you. So, Apple, be careful. This is the stocks all you guys own. Amazon dropped. Look at where it tested. Yeah, it's testing a 200-day right now. I don't like. All right, this is a good lesson. I'll leave you with this lesson, and then we'll get out of here. I'll do it here, and I'm going to do it on the S&P real quick. You see the volume? All this red volume. That's selling pressure. That's institutions. That's not mom and pop getting out of Amazon. That's institutions. Now look what happened on the bounce. You see that the black? It goes down, down, and we only have an hour left, and it's even lower. So as we're coming down on high volume, and we're bouncing up on lighter and lighter volume right to the 200-day. That's a sell signal. And man, you look at this, so I don't know. These big cap techs look like, to me, they need to go lower. You know how I always tell you guys when I do this, I see things, and that doesn't look great. And this could even do maybe this and maybe come up a little bit more. But these volume patterns, oh, now it's negative. These volume patterns are no good. Now let me show you this on the SPY, which is the ETF for the market. So this is good stuff, you guys, really, if you're home gamers. Let's look at the high volume selling as we came down. That's institutional money selling, selling, selling. So we call it distribution. And then look at the buy volume. What is that? Right into the resistance, which we know when we break below these moving averages, they're resistance back, right? And look where it did today. Tried to get over the pink line, the 200-day, which everyone follows, and failed and rolled over. So we came down on hard volume, rallied up to the resistance of the 200-day and light volume, and now we're getting a reaction back down. This is typical bear market or bear phase corrective action in the market. This is classic. Now look at where the low, or not that, I want to go to the QQQ. I think the Qs might have to come as far down as this, down in here. That would make Amazon and Apple and all these big cap tech stocks come down a lot more. And I think then everything could get into sync. So anyway, I just want to, you know, man, there's a lot of support in there. Anyway, I don't think we're out of the woods yet. I'm again, on the weekly basis, we look at that S&P. Could this still be where this was wave 3, this was A, this was B, and then we're working on 4, and that's the new bull market? Or is this really bearish scenario playing out? I'm not giving up on this red scenario where we're still going to go up, but I'm just not certain we found the bottom yet. And whether we want to blame that on trade or the election or whatever it happens to be next week, I'm expecting a big move. But let's hold out hope that once we get into this area, this general area in here, you see all the support that we hold and we turn up very strongly. Because again, if we roll over and break that, that's it, lights out. So I will do, we're going to stick to the plan that I laid out on the written. That's what we're doing. We get that at 2,500. We're going all in. We're buying everything back. If we see this kind of corrective and turn back up and we get the breath signal, because we need to make sure everything's going up together, and we'll also be hopping in. So I don't care what happens on news. That's the plan. So either big move up or down, we have plans for both of it. So we're just going to execute based on that. If something crazy happens next week and we start heading down towards that 2,500, 2,520, the February low, and break support, I might do a special report, and maybe we can get it during market hours, kind of show you guys how the market's bottom in real time. So that would be pretty cool. So barring that, just watch for us to maybe possibly make a trade on the active or the model portfolios, and you have my thoughts and you have our roadmap and how we're going to be handling your money. So that's it, everybody. Have a great weekend this weekend, and we'll speak to you again next week. Take care. Bye-bye.